What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we're going to talk about Intel, ticker symbol INTC. We will go over their Q2 2020 earnings that they announced on Thursday after the close, which resulted in the stock price taking a huge dive of over 16%. Now, Intel is also not a growth stock or a speculative play. They are a $200 billion blue chip company that has been around since 1968. So the question really is this a dip buy opportunity or a real cause for concern for investors? So we will go over their financial summary, the reason why they dropped, and then look into the technical pattern and kind of understand where those next key support and resistance levels are going to be, and where can the pattern or the stock price bottom out moving forward, and then we'll compare that to AMD's stock price. As always, if you guys enjoy this video, please make sure to drop a like. It really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So this right here is Intel's Q2 earnings. They beat both EPS and revenue estimates. EPS coming in at $1.23 per share, while revenue for the second quarter was at $19.7 billion. It was a solid quarter for the company, but they announced their delay related to the next generation 7 nanometer chips, which now don't go under production or will not be coming out until 2022. To add further to the pain, their Q3 2020 guidance looked really weak, as you guys can see right here, with their revenue for the third quarter dropping to $18.28 billion, which is expected to be down 5% year over year. Operating margin will be at 30%, that's expected, down about 6 percentage points year over year, and their EPS taking a massive hit of $1.10 per share, down 22% year over year. So investors were obviously not happy with this production delay and weak Q3 guidance that created a big rotation in the semiconductor space, with people fleeing from Intel stock into AMD, which was up over 16% on Friday. Now, all that said, let's jump over to the second quarter 2020 financial highlights and the revenue breakdown. So this right here is their Q2 2020 financial highlights, and you can see that this note from the CEO of Intel, where he says it was an excellent quarter, well above our expectations, on the continued strong demand for computing performance to support cloud delivered services. And he goes on by saying that in an increasingly digital world, Intel technology is essential to nearly every industry on the planet. We have an incredible opportunity to enrich lives and grow this company with a continued focus on innovation and execution. So the revenues were up 20% compared to the second quarter of 2019. Their gross margins were down to 53.3%, and they spent less money on R&D this quarter compared to the second quarter of 2019, which was down about 5%. The tax rate increase, which can be seen as a potential hurdle for the company because that is going to decrease their bottom line, but nonetheless their net income was still up to $5.1 billion this quarter compared to the second quarter of 2019, which represents a jump of close to 22%, and their EPS was up by 29% at $1.19 per share. So now, breaking down their revenue based on all these different business segments, Intel's revenue is essentially driven by two major segments. They're data-centric and they're PC-centric. Their data-centric has further 4 more business segments: the DCG, which is more about cloud computing and cloud services; IoT, which is going to be Internet of Things, which has 2 more subsections to it; then NSG, which represents the memory business; and then finally the PSG, which relates more to the programmable semiconductors and communications space. And then finally, under the PC-centric business segment, they have the CCG, which is more on the consumer side, which relates more to the graphic chips, the gaming, and other memory cards, which most of us know Intel from. So all in all, they saw a decent bump in both their data-centric and PC-centric segments. Data-centric was up by 34% and PC-centric metric revenue was up 7% year over year. Their cloud services seeing the biggest jump of over 43%, while their Internet of Things IoT segments struggling and dropped close to 32% and 27% respectively. So looking at their revenues, they've been consistently growing that number at an average rate of just over 6% since 2017. Again, this is not a high growth company. This is not a spec play. They're a pretty mature and stable company that have been growing consistently over the years, which makes sense why they're growing at such a small pace. Now, their full 2020 revenue forecast is at $75 billion with an operating margin of 32% and an EPS of $4.85 for the full fiscal year 2020. They foresee a revenue increase of 4% year over year from 2019 going into 2020 and a decline in operating margin by 1 percentage point year over year. Looking at their net income, the company remains profitable with their 2019 and 2018 net income at just over $21 billion, and their 2020 net income so far in the first 6 months is just over $10 billion. So the net income margin is steady at an average of 24.75%, meaning for every $1 in revenue Intel generates, at least 25 cents trickles down to the bottom line as net income for the company. Looking at their historical EPS and revenue estimates going back 4 quarters, the company has consistently shattered analyst expectations every quarter. Now, quickly going over their balance sheet, the company sits at cash of just over $8 billion with their debt sitting at over $38.3 billion, which gives the company a cash to debt ratio of under 0.25, which isn't bad, but they can certainly do well if they're able to pay down more of that debt. Now, that being said, the company still has a strong balance sheet with total assets exceeding total liabilities by more than twice. The company has strong free cash flows at $21.9 billion with a free cash flow to debt ratio of 0.57, and that essentially means that if they wanted to, they can use their entire free cash flows to pay down their entire long-term debt, and they can do that in just under 2 years. Now we're going to jump over to my TradingView platform to look at the stock price and see how it's been performing over the years, and then we'll compare that to AMD's stock price and where those next key support and resistance levels are going to be moving forward. Alright guys, so here we are inside my TradingView platform. If this is the platform you'd like to use, the link is going to be down in the description below for you to get started with TradingView. So right now we're looking at Intel Corporation, again ticker symbol INTC. They're listed on the NASDAQ exchange, and you can see that they're closed at $50.59 and they were down about close to $9.81, which represents a drop of close to 16.24% for the stock. So right now we're looking at the weekly chart, and you guys can see this big red candle, which is the drop for Intel after their weak Q3 2020 guidance and also the delay related to their next generation chips. If I were to bring out AMD's stock, you'll see this big run up on AMD, and they were up close to 16.5% after the markets closed at $69.40 is where they closed on Friday. So they finally broke out of some type of resistance and hit a all-time high of as high as $69.94. So now going back to Intel stock to kind of understand where those next key support and resistance levels are going to be, if I were to kind of pull back on the chart, you guys can see that going back as far as 2007, 2008, that was kind of like when the financial crisis and the Great Recession happened. They have been on a really good, consistent uptrend, right? So they've been making higher highs, higher lows, and this is an ascending pattern. And the 200 moving average, which is the blue line, has acted as really strong support. So around that time, they were trading at around $11 to $12 per share, and since then, they have gone up close to about 300%, and before the drop, they were up even more at over 443% return. So that being said, this right here was kind of like the drop from the internet bubble, so from the late 1990s to 2000, when the stock hit a high of $74.85, more so about $75, right around that level, and then they saw a massive drop of close to about 80% in the stock price. Right, so they had a pretty significant drop due to the internet bubble, but since then they have done a consistent job in turning things around and pushing up higher, trading above their 200 moving average. So if you were to put some simple trend lines for the ascending lows that the pattern is making, I would put it right here, because that has previously acted as some really strong support for Intel stock and kind of like right aligned with the 200 moving average, and that's where the stock is essentially bounced off of multiple times. So looking at the daily chart, you'll kind of see that the stock is essentially in no man's land here. It's kind of like very oversold. This was the huge gap down from the prior day due to the earnings, and the stock was, like I said, down over 16%, and it's very difficult for us to kind of understand where the next support and resistance level is going to be. But looking at the technical factors and kind of understanding this $45 to $44 level has previously acted as some type of support if you were to go back from the COVID crash and all the way down to March 16th. Well, that's where Intel stock essentially found support before recovering and rebounding from that level. And that has also acted as some really strong support. You guys can go back as far as October of 2018 when Intel stock essentially hit that $44 to $45 level and then pushed up close to about 32%. It retested and revalidated that support once again in May of 2019 and then pushed up again close to 18%, made its way back down to this level in August of 2019. So it's hit that $45 level not once but multiple times, and that's where I personally see the next support for Intel stock. So right now there is a lot of aggressive selling coming, and that can create some type of irrational selling too, right? So Intel in general as a company, looking at the fundamentals of financials, they are one of the leaders when it comes down to microprocessors, chips, and the semiconductor industry. So it goes without saying that they're going to be around for a while. The only question is whether they're going to turn things around moving forward or not. They remain profitable. Their cash flows are steady, so they're sitting on a lot of free cash flows and a lot of cash, so they can also potentially make acquisitions moving forward. And it's not a significant discount for the company right now, but it's definitely something that I will personally be looking into more and doing some more research to see if I'm able to get a better value for my investment moving forward in the long run. Because Intel, again, like I said, is a strong company, and they've made a significant recovery, not just from the internet bubble, not just from the great financial crisis, but also more recently when they dropped all the way down to $45, which acted as a really strong support, and the stock essentially jumped over 44%. So moving forward, it's trading below the 200 moving average, which is no doubt that's going to be the blue line right here. So if I were to bring out the exponential moving average, which is going to be the EMA, you can see that that is kind of like very far away, and both the EMA and the SMA, which is going to be the simple moving average and the exponential, they're both right at the $58 mark, and the price is just so far off from that level, right? Close to about 13.8 to 14%. So moving forward, I would personally keep a close eye on the $44 to $45 level. If the stock were to sell off down to this level, that can potentially act as a really good ongoing support. And then we also have our ascending low that we looked at on the weekly chart that can potentially act as an ongoing support as well. And that's where I would personally be looking to get into Intel stock if it does retest and revalidate that level. So the dividend yield for the company right now is just over 2%. So it's not like you're not getting any returns out of this company. So they do pay out pretty significantly in dividends every single year. But that's kind of like the support that I would personally be watching. And the next resistance I see is going to be right around here, which is at $52 to $53 level, because that has previously acted as resistance right here. So if you were to kind of move back and look at back from July of 2018, the stock essentially hit that level and then got rejected and sold off 15%. And then again, you guys can see this huge gap in the stock price when Intel dropped close to about 9% from the prior day. So this was back in April 2019 when it was trading at close to $57, and this right here, it opened at 52, right? So that was a big drop in the stock price, and then it got rejected again at that level, further sell off of over 16%. And then more recently again in July 25th of 2019, and then again on September 12th on 2019, when Intel stock essentially hit that level at around $52 to $53 level and then had a minor pullback. So that's kind of like the range that I am going to be watching. The resistance at $52.91 to $53, and the support strong at $45, and that's where the stock is essentially trading now, right? So in between that range, and it's kind of like here. And so in my opinion, I think it's going to consolidate a little bit until it retests and revalidates $45 level before making a move higher up to $52 resistance. So now we're going to look into AMD's stock chart as well and bring it up right alongside Intel's to kind of understand what exactly is going on between the two stocks. So you guys can see that they kind of trade in very similar pattern. This right here was the drop for both of them, at which point AMD was trading right around the $58 level, and they dropped close to about 34%, trading as low as $38, and then Intel was at around $68 and they dropped close to about 34%, and they were down close to $50 per share. But since then, both stocks have done an amazing job kind of recovering majority of those losses. AMD pushed up close to 47%, and then Intel pushed up close to about 44%. And this right here is the huge variance between the stock prices. Intel dropping lower and AMD pushing up higher. So if I were to kind of switch the line chart, you can see that there's such a variance and such a inverse relationship now, because moving back, you can see that they were trading at very similar patterns, right? Up until more recently, when they're just both, kind of moving in different directions. So that's kind of like the game plan. Those are some of the levels that I will personally be watching for Intel stock. So if you're someone who's not already exposed to the semiconductors industry, Intel is definitely something to look into after the huge sell-off, because it does provide some value moving forward with the strong balance sheet, the strong revenue, and the net income growth, and the prospect of the company, doing some acquisitions in the future, and the fact that it has sold off quite significantly. And also don't forget that AMD is reporting their earnings next week, so it'll be really interesting to see how well they did in the recent quarter. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.